That's one of the main reasons that I was really excited about working together. And this was several months ago. We kicked this off, brought you in for clients, because one, we have clients that manage other people's money, but also their own that are focused on capital preservation. Like you mentioned, we've been through some bear markets. So how best to hedge and overlay strategies. And then we have, of course, I run a live trading room. So they want to chase, they want to swing trade. And that's where I really get into stock selection and sector rotation. And there's a lot of directional juice there that we're trying to squeeze. We love volatility.
But I think more and more, and we've talked about this in the past, I think more and more it's very much a vol clustering kind of market. And what that means is either people are panicking and that can snowball to the downside as it did in August, or we're just really shrugging off almost everything. And I find that investors are having a difficult time with that, and traders in particular. It's one or the other. As you really look at the different time frames. So you give people the overall look. So there's that old saying, the forest for the trees. So you can't get too stuck in the trees, because then you forget about the forest. You forget about the larger trend. I love that about it. Sometimes when you zoom out in your charts, I go, oh my goodness, I should have been looking at the weekly or the monthly, because that is a really, really important thing to notice.
And it depends on the events. So the August VIX explosion to 65 pre-market on a Monday was very much triggered by currency volatility. That absolutely triggered equity volatility, and VIX exploded, third largest spike, but it was pre-market, came down very quickly. So it actually skewed a lot of my ratio analysis. But anyway, this most recent one that we had was very much Middle East escalation. So that was folks, in my humble opinion, just clamoring or scrambling for hedges they didn't have.
We've got a couple interesting things. Like I thought this was kind of cool looking at the energy space. I thought there were some interesting ways to line up with geopolitical at this point, given that energy is, and I know you're sort of bearish on energy longer term, but in the short term, you're feeling like there could be a reactivity to it because of what's happening in the Middle East, right? So short term, anything can happen. So I think I was sort of thinking that might be an interesting place to create a little bit of a trade, because, and this is sort of part of my process. I start to add up the layers of edge. So I say, okay, could there be a tendency for people to want to get back into something? Well, as we saw with China lately, it was the most under-owned thing on earth. And sure enough, we're up 25, 30%. So suddenly it took a lot to flip that switch. It took a lot of bazookas in China to get things going again. But people have been piling into something that they ignored for quite a number of years. So could energy be an interesting spot? Well, combine that with the geopolitical that's going on. And then I start to get into, it's very underloved. And you get into the skew. So I'll go in and I'll look at the skew and I'll say, well, it's very flat to the upside. So I put on a trade today. It's already up a little bit of money, where I sold an out of the money put spread. So I sold an 88.83 put spread on XLE. I think I went November. And I used that. And so what I said was, look, the skew typically is kind of steep. And when I say skew, that means typically you get puts being more and more expensive, relatively speaking. It's fairly flat right now. So I thought, okay, well, let's sell the nearer the money put, buy the other ones. It's not going to get as expensive as it normally is, but we've seen vol really push up into this event. So this is your 52-week range of where XLE volatility is and the skew. And here we are up here. So there's no question, everything's been pushed up. TLT vol is up, XLE vol is up, equity vol is up. It's all up. But we can use this put spread to finance the upside call spread. And that's what I did today. I played some upside by selling some downside. And so the upside is also a little bit, we call it flat on the call side. And usually it's sort of downward sloping. And right now it's flat. So that plays even better into the strategy as you buy that call and sell a further out of the money call. So I like to look at these kinds of setups. So here's your VIX intraday beta to S&P. So your beta is 99th percentile, 98th, 99th percentile. That means this market is on edge, and particularly in the protection space, in that world of protection, this market is on edge. And that has to give us pause here, right? As much as we think, okay, 6,000 is coming at some point. As it is, if we're, that's from the forest standpoint, but in the trees here, we are seeing a lot of problems. And so I would say that you're getting a good kind of bang for your buck, even though the VIX complex is expensive now. It all is, right? S&P downside puts are expensive. VIX it's all fairly expensive. So you want to use call spreads. You want to use things that kind of offset some of the cost. And so if you were to go in and buy like a 25-35 call spread in November VIX, that could be something that looks interesting because of that reactive aspect to the VIX right now. You're getting a lot of beta to these moves in S&P. So that makes that more interesting to me than downside puts.
I love this. It also aligns right now. I saw last week, in fact, I posted this 100 percentile for both JP Morgan and Goldman hedge fund long positioning. So speaking to where are the hedges? And then we had this yesterday escalation news right after the open, and they're clamoring very, very quickly. And they were large size bets that came in. In fact, there were 50,000 contracts that hit for March 2025 SPY in the 572 region. They came in very quickly, realizing we better take care. We may still be going up to 6,000, but I don't have any tail risk hedges on. So that's excellent. That's the proof that the market is still bullish, but offsides if something does go awry. Ironic that not only do we have someone Jeffrey, who is our economics advisor, who has been extremely focused on China, specifically BABA and some other arbitrage plays. So that worked out extremely well for edge clients. But I happened to just on Monday going, I think this is ready for a squeeze, and posted that on our YouTube channel, actually, for 3 particular stocks. And it was a question in here, was that a gamma squeeze? It was more than that. It was really a tinderbox waiting for any flows to come in. And because it was just the perfect storm of again, money looking for a home. They don't want to keep crowding out the Mag 7. They've already extended a lot of the defensive sector rotations in the safety non-cyclical plays. So China got some positive news and money just rushed in there and swamped the flows. That's the macro trigger that basically also squeezed those shorts. So to say it's a gamma squeeze that's one of the results, but it wasn't the reason for the season. It was definitely, there were no flows until everyone, hedge funds, oh my God, we're underperforming. Here's a fabulous sector, Tepper's all in because of monetary fiscal stimulus. So anyway, that is that rotation, which is parabolic and I think needs to digest right here, right now.
Nothing super, super cheap at the moment. So I think you basically have to kind of spread it out. And I think it's important to kind of think of your sort of time horizon on this. Is this something that you want on all the time, or is it something that you want to just get you through a period? I think a lot of the flows that I'm seeing are thinking probably what everyone's kind of thinking, which is, look, if we can just get through this difficult period into November, then the coast is clear for eggnog and merriment, right? So towards the end of the year, as we often get. And so you're seeing a lot of very shorter term positioned things. Although the trade that you're talking about, this sort of vol compression trade, was in December. So that's going to play the compression. So some people are thinking, I need a short-term hedge, but then I'm going to play the vol crush afterwards. This is kind of the playbook right now. Let's get through something difficult and the election and hope that that goes over fairly smoothly.
So I wanted to just bring up this chart. I know we're kind of going back and forth because you were just talking about hedges and the process that you use and employ to kind of roll up to set them and forget them and roll them. But you had previously talked about an XLE, you're selling a put spread, buying a call spread. And one of the reasons why I bring this up is because as we talked yesterday about crude, this is on a 2-hour chart, but just to kind of give you those watching a feel, this was the and it had a little shakedown. But the bigger picture is it is supported, looks like we could go higher if we were to have a geopolitical event, how best to play that. You put on an XLE tactic, which I like, although, as you also said, big picture, I'm bearish. That's on a monthly chart. But for this XLE, just a simple little technical analysis using this time frame of weekly, daily, and hour, we came right down to a 100-week, which is very supportive. It's a great place for a bounce. And XLE has large cap weighting of Exxon, for example. The point is, this is definitely trying to get back above. So you're playing XLE for a breakout higher in crude, either because you like the because you like this sector, because you like the skew, because it's also a proxy for potential oil spike, correct?
It is. That's sort of the number of layers that you kind of like. I've been sort of thinking about energy because it is underloved lately. And now we kind of have that sort of fuel, that accelerant, right? We talked about that accelerant with gamma. When you can add that potential accelerant to the situation, now you have something that's starting to build up to an interesting storyline.
Join Han's Options Education course by scanning this QR code or by clicking on the link in the description. Watch the full options macro to micro power hour episode by clicking on the video here and subscribe to LaDuc Trading YouTube channel for more content.